in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. It's Kerry Lutz. The date is February 23rd, 2016. Still much turmoil in the markets, much turmoil in the world. We've got wars breaking out or potentially breaking out. We've got oil prices crashing. And it's been a while since we've had him on here. Arch, hey, you've been forecasting using technical analysis and the stars for decades now, and we're really happy to have you back on.
Yes, thank you. It'll be 39 years in May.
Amazing how fast 39 years goes by, isn't it?
It is amazing. I wake up some mornings and say, 2016, how did we get here?
Oh, God, yeah, I know that feeling. Yeah. It makes you start feeling old, even if you don't physically feel old. When you start counting the years that go by, you start feeling old.
Well, it does help to make you feel a little older when your friends start dying.
Yeah, well.
When your generation is...
Yes. Well,
it's passing.
The baby boomers, well, the greatest generation is gone, basically. There's not many left. They were dying at like 10,000 a week at one point. And hey, you know what comes next, Arch? The baby boomers. So, hey, on a brighter note.
Well, I'm pre-baby boomer.
Yeah, you're pre, but you're like right before.
Yes, that's right.
Yeah, you're right before. My sister's pre also. The baby boom goes from 46 to 64. So you're looking at a total of 18 years. So, but if you're a year or two before, you're an honorary baby boomer.
I'm 41.
Oh, 41. Well, not quite, but close enough. You're scaring me now, Arch.
Well, my father died at 92, and my mentor in Wall Street died at 102.
Is that right? Really? Amazing. Right. Amazing. You know, hey, well, longevity, as long as the quality's there, longevity's great. Quality's not there.
I'll tell you what I'm looking for, and that is Joe Granville died a couple of years ago at 90, and Richard Russell died this year, just recently, at 91. And they both worked up until the last few days. Yeah,
they died with their boots on, so to speak.
Exactly, and I'm planning on that.
Same here. Same here. I will die. I will die in front of the microphone, for sure. No question about it. That's my ideal way to go. But hey, we have to get through the crazy times that we're living through right now. Arch, I mean, the economy as we know it, let's just put it charitably, has transformed within the past decade. Where do we go from here? Everything seems...
The thing is, it's been building up for many decades, and it is so ridiculously overdone at this time that we may have a decade or possibly more of consolidation from the overbuilding and the over-expansion of credit and whatnot.
Yeah, well, leave it to the central bankers. They never miss an opportunity to inflate, do they?
That's right, because that's their money. They can create it out of nothing. And so we are left with the feeling that, hey, as long as every dollar that they create makes the one in our pocket worth less.
Mm-hmm. Yeah. So the markets now, what is your work telling you as far as the stock markets are concerned around the world?
Well, we did get very oversold on a pullback low in I think from January 20th was the first one, and the second was about 8 or 9 trading days ago, where the S&P got down just about to 1,800, and the Dow got down to 15.5 or so. Yeah. Right. And they both double bottomed. The Dow actually did not break the August low, but the S&P broke it solidly, and the Nasdaq broke it worse than the others, which is surprising. If you want this market to go back up, that's not a good sign.
No.
Also, the Nasdaq did not get back up to the 50-day moving averages yesterday, which they did in the Dow Dow and the S&P. But one of the worst things about the different indices is that the ones acting the worst are the broadest. For instance, the New York Composite action has been much worse than the Dow or the S&P, but it's more broad. And then similarly to the New York Composite is the Wilshire 5000, which is the broadest one that's still quite popular. And that the action of the Wilshire and the New York Composite have been much worse than the ones that everybody else is watching.
Right. So
consider that a very negative sign.
We're going to test lows. We're going to test lows again. Is that what your thinking is?
I think the next time that we break the lows, it's going to turn into a real serious capitulation.
Which means a falling knife scenario that nobody wants to catch, right?
Exactly. Right. So far, they've been willing to catch it.
Yeah.
And I think that is also symptomatic of not finished yet.
So what is a wary investor to do? I mean, we're seeing negative interest rates potentially breaking out around the globe. What do we do?
Countries now.
Yeah.
And I would say that these central banks that have been buying all these bonds, and now they're driving the rates negative, they're driving their own through the roof.
Yeah.
And I don't hear anybody talking about that.
Yeah, well, actually, what I have noticed, interestingly enough, in the mortgage-backed security space, pretty much the Fed owns them all, or owns a big chunk of them, correct?
The Fed is what?
Owning a big chunk of the mortgage-backed securities that went sour during the crash. Yes. Well, what's happened, and if you remember also, they basically had proclaimed all of the entire second mortgage market, home equity line of credit, all that stuff, pretty much worthless. But prices have appreciated so much now that many of the foreclosures that you see, at least in Florida here and in other places, actually have equity in them, meaning the banks are in a positive position, and they're starting to foreclose again on home equity lines of credit and second mortgages, which means that that those bonds turned out to actually be worth something.
Well, I do know that the government is pressuring them to do it again.
Yes.
You have to loan to people that can't afford it.
Well, it makes total sense.
And people are generally in the mass of people here are still not aware of that. They say, oh, Wall Street did this, Wall Street did that. Well, the government made them do it, so they found a way to make it profitable by squeezing around some corners. And made it profitable for them. And so both are at fault, but the origin of it is the government.
Oh, yeah. No question about it. I couldn't agree with you more on that. I mean, hey, if you watch The Big Short, you understand that the banks, all of a sudden, they saw a way to make money for free, and they just jumped on board this thing. It wasn't just at the government's behest. Yeah, it started out at the government's behest, but then they saw how much money they were making, and they just jumped in with both feet. So, but now we would like to repeat it because mortgage originations are down 24%, in large measure because of other regulations that the government passed to stop another mortgage meltdown. But because they passed these laws now, or these regulations by the Consumer Financial Protection Bureau, now all of a sudden sales are down. So what do you want here is the question, What do they want? So, hey, but in any event.
Just one more point from that. There was a great article that I have on my website from Wired magazine. It's called The Formula That Killed Wall Street. And a mathematician, a Wall Streeter that knew about something about mathematics, walked into a trading room and said, this formula you all are using to value these packages, there's an error in it.
Yeah.
And they said, get out of here. We're making too much money.
Well, that was the movie Margin Call with, who was in it? Jeremy Irons and Demi Moore and a couple other guys. This guy was a quant. He was an aerospace engineer who left designing aircraft to go to the much more worthwhile and much more socially redeeming place called Wall Street. And he was running the formulas and said, oops, we got a problem here, Houston. These bonds are worthless. And he breaks the news to his higher ups who don't want to know it at first. And then they make the decision to just dump their entire junk bond, mortgage bond rather, portfolio on the rest of an unsuspecting Wall Street. And they get out and everybody else is left holding the bag. They lose money, but they live to fight another day. And that was supposedly a story about Goldman Sachs. So, hey, but look, where are we heading here? What's the deal with precious metals, gold and silver, Arch?
Well, we believe that the market will break again and go to lower lows, and the gold is the best action that we've seen since the top. The thing is, I've been staying away from it because it has never made a higher intermediate high all the way down until now. So I'm beginning to get interested in it again. I did have a buy on my hotline updates, and I mentioned in every letter that, hey, if it goes above this and then goes above that, then it should be good. And it did that in 2 or 3 days in a row, and it just really screamed, which has been profitable.
Mm-hmm. Yeah. So is this it?
It's pulled back now, and I think it may run again as the market and some of the other things all these things are in the works right now that you mentioned when we started about things going on in the world and the politics and the economies and the Chinese market and this, that, and the other that are disrupting normal patterns and coming across greater volatility than we've ever seen in a number of different items. For instance, when the Swiss took the peg off the euro, it went up 30%, the Swiss franc, in minutes and closed the day up 18%. And I know that a lot of people went bust when that happened, because what you have to put up for currencies, the mass of the public has to put up 5%, and serious traders, I think, are much lower. And if something moves 3% in a day, you may have lost 100% of your capital. And these things didn't used to happen. You didn't have major currencies swinging 3% in a day very often.
Nope. That is unusual. Saw it with $1 a couple of weeks ago. In a few days, and it was down 3%. So.
It was down 3% in a couple of hours.
Yeah.
I showed the hourly chart in my last letter and called attention to the first one was going to happen because it was in a rising wedge pattern on the chart. And I said, this could drop quite suddenly. And I had it in my newsletter, and I posted it on LinkedIn. And then it did. It's like several days later, 3 or 4 days later, it had a 3% drop. And then this one a week or so ago duplicated that and was the biggest one since 08.
Right. Yep.
09, March of 09, I think it was.
Yeah, I think you're right. Yeah. So we got interesting times ahead. What about food? Where do you see the commodity sector going in the intermediate term here, short, intermediate?
Well, what has been going on in the commodities market is that China has been expanding like a maniac, even into building a whole lot of things that they weren't using. You've got empty cities over there, which is a rather strange phenomenon. And now they all of a sudden quit buying commodities. This is building commodities and food commodities. They're not stopping the food, but they're cutting way back on the food. So there are serious situations developing in, when people get hungry, then they get very restless, and then you can lose control of them. And I don't know what we're going to see in what countries, but China, it's not only hitting China, but all of the suppliers to China around them.
Right, Australia,
Thailand, Vietnam, all of the others. I remember they got hit when in what was it, 98, when the Russian ruble went down, but it was other things in China that were happening at the same time. It wasn't the ruble that did that, but it was. I think these countries were saying, well, we can build your stuff for people working at $1 a day, $2 a day, or $3 a day, and China comes along and says, well, we can do it for $1 a day, and so it sucked the money out of all the satellite countries around China. And the Thai baht went down first, and then the Russian ruble went down.
Yeah, that was, 97, 98 in that time period there, and it was a disaster. Hey, well, so what about the election? How do you see that tying into the other trends?
Well, it is more unusual than usual.
Yeah.
But the people have been electing people to go to Washington and do what they say they were going to do, and they're not doing what they told us that they were going to do, and the people are angry, so that they have trashed the establishment leaders in both parties and are bringing up very strange people.
You think?
But I'm basically a rebel to start with, and I like it. Yeah. Well, I don't like the establishment, either the Republicans or the Democrats.
Well, look where they brought us here, right? To the precipice.
Yes,
so.
And that's another long story where the conservatives and the liberals come up with a great liberal idea, and that's very radical, way over to the left, and then they bitch about it back and forth, and then the conservatives say, okay, well, we'll give you a little bit of that, but not way out there.
Incrementalism.
Yes, incremental, and we move to the left, and then we move to the left more, and then we move to the left more, and we're on the radical basis of socialism, communism in this country.
Yeah, the road to serfdom, right? Written about the 50s. Yeah, in the 50s. You wrote that book, if I'm not mistaken. So. So the elections.
And they're saying, well, the Republicans aren't compromising anymore. They're not working with us because they work with them all that time, and now the base is getting angry. Like, why are we the ones to compromise every time?
Oh, it's absurd, and the country's basically bankrupt as a result. And hey, the Republicans favor corporate welfare subsidies for their donors, and the Democrats basically favor welfare state policies for their voters. And so the trade has been, we'll give you what you want for yours, you give us what we want for ours, and screw the country.
Both of them.
Yeah, right. I mean, that's really what has happened here. And
well, the unfortunate part of that is that when a democracy falls, it is usually replaced by a strong man.
Yeah. Oh, yeah.
You have to have someone tell the kiddies that they can't have any more candy.
The party's over.
Yeah, and I hate to see America go that way.
Yeah.
But the way it is right now, I think it's required.
Yeah. My ex-partner used to say, the situation is hopeless but never serious. So that's the way it's been. Never serious. Hopeless but never serious. He worked for the phone company and for New York Telephone before it became part of Verizon. And talk about dysfunctionality. You never saw anything more dysfunctional than the old-fashioned phone company. I mean, nobody worked. Nobody did anything. It was a miracle that the phones rang at all. So anyway, Arch, well, any parting words of wisdom for us here? What we should be looking to do in protecting ourselves, yourself?
Well, I am in favor of maximum protective measures. Whatever you know how to do, do it. In the newsletter, we are double short using full margin and have been for a while.
Interesting.
So that's just whatever you know how to do, do it, because we are on the verge of some super serious that could become fatal in some instances. So.
Yeah, no doubt. I tend to agree with you on that. But hey, we've been at the edge before, and clawed our way back. Maybe we'll get lucky again this time. We can only hope. Anyway, Arch, want to find out more about you? Get Crawford Perspectives, best place to go?
Crawford Perspectives is a long name to Google. If you want to Google Arch Crawford in quotation marks, it will take you to my website, which is crawfordperspectives.com, www.crawfordperspectives.com, or you can email us at crawfordperspectives@earthlink.net, or you can give us a call at 520-577-1158.
All right. And as always, you will find a link in the show notes to this interview on financialsurvivalnetwork.com. Take a look at the site. We've got interviews with Arch on there. We've got all sorts of articles from around the world talking about the issues as they really are, not as the powers that be would like you to think they are. Arch, it's always great talking to you. We'll talk with you again soon.
Thank you, sir. Bye-bye.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.